Hello, everyone. Yeah, talking about gbpusd, we have it right here. We nearly got on the best entry point. Let me go for 4 hours. So we nearly hit the best entry point, but we only were on the second best entry point. So if we look at here, where's the white? Yeah. So we did enter this trade on this area here, okay? But the best area, as I've mentioned to you guys already, was on the top of the range. That was supposed to be on here, okay? And we nearly went to the best area. There was only a few points to get in there. But that's okay because, I'm into the trade. So that's not a problem. We are right now, I think, 200 points. Let me check. Where is it? Here. We are right now 167. Yesterday was 200. Yeah. So 167 pips. That means 1,600 points. So that's pretty good from my understanding. To be honest, it is doing quite well. Just need to manage the trade now since there is plan to hold the trade position correction. If there is a trend to hold, yes, there is a plan, but I'm gonna, as we had a break of this area here. Most probably we're gonna have a retracement. So what I will do is I will cut 50% of my trade and let the rest of the other 50% run. And one thing here, guys, don't ever add positions to a losing trade. Okay. So right now we have top on here. Let me just, we have top on here. Okay. And the bottom is here. So if everything, oopsie. Oh, that's wrong. That's not what I want. We have top on here and the bottom on here. So quite similar. So if everything goes as expected, we may have a retracement soon. And if we have a retracement, I want to execute 50% of my trades. I'm going to close 50% of the trades here. Where is that thing? I think it's on here. Yeah, this one. There. Can I make it smaller? Can't make it smaller, right? No. Anyway, so I'm going to execute 50% of the trades here, hoping that this will do something like this. Okay, oopsie, sorry. Hoping that it comes somewhere around here and then come back lower. Okay, so just because we have this massive push down, I'm going to just get out of a little bit of my positions, and then I'm going to get in again once we have another opportunity somewhere on those fib levels. Okay, and of course we do have some resistance areas here as it is a consolidation. So what I will do now is I'm going to get my phone, and then I'm going to close 50% of my trade, gbpusd. So that's a nice 1%. That's a nice 1%, actually 0.80%. So I'm going to close 1.2. I'm going to close 0.6. 0.6. Okay, that's awesome. And I'm going to let the rest run. And again, if it comes to this area here, somewhere around 26.5, we're going to watch and see how this goes for continuation on the downtrend. Now, looking to the euro dollar, we were very close off my Q1 target. Not only me, but some institutions like Bank of America, as I've mentioned previously. So this trend line, of course, has been broken. This was just for confirmation, nothing too big there. This one have been passed. So what does rest for us now is, a bit of a pullback again, or doesn't even need a pullback. Sometimes what I find is, we having a little bit of some up move, and then London session begins, New York session starts, and it just continues to dump the price. This can happen on gbpusd as well, but we can't predict the future, so we just need to work with what we have on our hands. And right now, the best option what we have is to manage the trade as it is on a positive. Never add positions to a losing trade. Okay. This case here is different because our position was configured to be able to get into negative territory to get the drawdown exposure for us to get in another half of the position. So only half was entered here. The other half would be entered on the best entry point. Unfortunately, it didn't trick the order. So therefore, we are only 0.5% risk on the whole position. So do you get what I mean by, entering here, or do you want me to explain again? I think it's a very straight forward risk management. Do you guys do those type of risk management, or you don't do it all? Yes. What sort of you do? You just close 50% once you have certain amount of percentage scaling out. Yeah, that's exactly. Okay, that's good. So we always have to scale out on those positions. And on the retracements, I'm always adding more positions to the positive side, of course. Now let's move on. I have Euro CHF. Where is it? Oopsie. I've just added a short position on Euro CHF. Okay. Few reasons. I'm gonna share it after on my Telegram, the whole analysis. But as we hear, we can see technically we don't have much to see. So if we put in a 4 hour, it's already 4 hour. If we take the zoom out, we can see that it has been on a downtrend pretty bad, okay, since ages. Since beginning of 2023, the whole Euro CHF was downwards, okay. And then once 2024 started, we did had a rally on the euro. Therefore, it did rally back up on here, okay. But we didn't have any consolidation, accumulation, formation on here. Therefore, it wasn't effective for me to enter in a trade. But right now, we are having a very minor but very shiny, I would say. Oopsie, what happened? Consolidation here. All right, very minor, nothing too big. I would call it even a double top here. But once we drop for lower time frames, let's say like 15 minutes, 15 minutes, we can see that, yes, we do have a consolidation here. Okay. Therefore, I'm looking to get short into this trade. And again, it's exactly the same concept of the pound dollar. If we look at pound dollar, we did had a consolidation, right? Remember, we did had a consolidation there. It was completely the same sort of price action that I've mentioned to you guys, that I've used to enter the trade. So the exactly same thing will replicate on Euro CHF now, okay? If we look, we are on the top. We did have this pullback down already, but let's have a look. Okay, we are on the Forex already. Let me see someone send the chat. I read that CHF long overdue for correction recently. I did not read the detailed information on new drivers in the making for this to happen. Can you review Aussie dollar and the meeting today? Yes, I will do this just in a second. I just want to finalize some ideas first, but I will do this. Okay, so if we look here, right, just we don't need to go too far. If we look, we had the broken bottom here, okay, and then we had another another retracement, and right now we're having possibly another bottom to be broken. So what I will sort of try to do here is catch the wave as it is breaking, like, let me show you. Okay. Here. So see that, it's good for us to get in the trade when the wave is like this, because then we can surf the whole side of the wave. I don't know if any of you here are surfers, but this is always the best thing to do. If not, then, the second option would catch this wave here, okay? Because this wave, they still have lots of rooms for you to play. Now, if you can't get in, then yes, sort of. Sort of. I mean, like, how can I explain this? In a simple terms, okay? Just we are in the middle of the wave. So there is a possibility that the wave will continue to be as it is. Therefore, I'm looking to try to get in the train that the train is moving, so the train is going somewhere, and we try to get into the train as the train is moving. Now, right now we are somewhere here, okay, that it is breaking already, and we're trying to get into the wave to finalize somewhere here. So it's going to be a more short-term trade, I would say, not like as we hold in gbpusd. What I would do is I would try to catch from here. Let me zoom in. From here, where's my pen? From here to there, okay? That's all I want for now. Did you guys got it, the concept of the wave? I think it was pretty easy to understand. Anyways, so the reasons that I'm looking to short is basically that in the Eurozone, some data has remained more stable despite the weakening CPI. Okay, so if we look at Europe, oopsie, let me get this off. Not good here. Yeah, good. If we look at CPI, we'll put inflation rate Euro. We can go to here, and we did have a pretty big drop since January last year. Okay, so 1 year of down inflation. We only had a few months here that was better, like more than the other months. But despite that, December had a 2.9 inflation, and January has 2.8 inflation. That's a 0.1 lower than the last month. So indeed, we are having a weaker CPI. So it came as expected. It came as consensus, as we can see down here, 2.8. But risk coming down. If we look at the bigger picture, once we look at the charts, like, okay, the consensus says 2.9, and it came in as 3. Okay, of course it will impact the market at the moment, but on the long run, we need to look at the long picture, the bigger picture. And right now, this is the bigger picture. We came from 8.5% all the way down to 2.8%. Of course, lower inflation is better where we are at the moment. Not always, okay? Remember, not always lower inflation is good. Sometimes it can be bad. In very rare cases, but it can be pretty bad, and this is stimulate the consumption of the society. But for now, it is doing pretty good. But it's weakening. And that means that the central bank will have to cut the rates. And this is what investors are looking. And then we had as well more a dovish shift in the last central economic, the ECB, the European Central Bank meeting. And it leans, as I just mentioned, it leans more to a potential downside for the euro. Now, this is pretty much basically it what I'm looking on the euro, okay? Now, on the Swiss franc side, the prevailing buyer is neutral due to a mixed data, okay? Looking at the chart, the price here, the price is near the upper zone of a downward channel on the 1 hour time frame. If you look at the 1 hour time frame, we can see that exactly what I've explained it already, that we have even a bigger picture here. Like I can put in a bigger picture. I can put like that, okay? And we can see that it's basically a downtrend, but then we are consolidating, and it's on the upper channel of the consolidation on the downtrend. Okay. Currently, it's interesting with a resistance level here, right? Same as the consolidation. So I do think there is a potential of investors moving the money to CHF in the next weeks, but the most of it is euro getting weaker. Okay, euro getting weaker. Now, if we move, can this thing goes away? It can't thing. I can't see it. Okay. So if we look at euro CHF here, if you look at the retail area, even on FinLogix, I had a look before, it was 99% of traders on the long side. So if we look at here, here. So yeah, euro CHF, it's already in there. So 98.7% of the traders are long on euro CHF. So what do? We do the opposite of what the majority is doing. The majority is long, we're going to go short. Okay, so this is just a complementation of the whole fundamental analysis as well as the macro analysis. And if we look at the other confirmation, it is the majority long as well. Now, if we look at the seasonality, what we have here is downtrend. Okay, so that's pretty good as well, 1% down. Let's have a look on how much is going to be 1% down. Yeah, so that's going to be pretty much where my target want to be. Okay, so this is just my analysis for euro CHF. Nothing too crazy, but my stop loss will be a little bit lower. Okay, so this is going to be a little risk trade. I'm going to use the margin that I got on pound dollar to get into my my euro CHF trade. So my entry will be at the market price. My stop loss will be at 93.65. Stop loss 93.65. I have these things noted on my notebook. Sorry, guys. 93.65, and my take profit will be at 92.7. 92.6. So yes, it is a bigger trade. Okay, I know these, but I'm just going to use the risk that I just got into pound dollar into this trade. Okay, so it's here. All right, let me get my MetaTrader, and open the position. Okay, cool, done. 93.65.0, and my take profit would be at 92.6. Okay, so this is it from me. Okay, cool. Just got my trade placed. So now moving ahead, let the trade run. This trade is only 1% risk for me. So it is a very risk trade, as I've just mentioned, because we are now training on a range, but I do believe on the strength coming. So let's see if they have any patterns here, prediction for this. We don't have it, so that's okay. But okay, that's all. Moving ahead, USD JPY. Now, I've mentioned about USD JPY as we've begun the year. That let me put it on a daily. Okay, cool. As we began the year, right? That we had this downtrend that was more to a fake downtrend, and now we are coming back again. So the whole concept here is that the first quarter, the pound, not the pound, the dollar is stronger. Okay, therefore is driving US dollar up and yen down. As the Bank of Japan is not doing anything to change their monetary policy, it is affecting USD JPY in a sense of this is not helping, because investors are willing to put money on Japan, but at the same time, they need a perception that, yes, we will switch gear from negative to positive interest rates. And at this moment, Kuroda is being sort of ineffective on these, right? He tells them that they will do something on what day, and then the day comes and he's like, okay, we're not going to do it. It has been this since last year, okay, since last year. And I do think the continuation to the trend on the up, especially if we break this, I've mentioned this already multiple times, okay? So I just continue to hold the same view here. And I told everyone that this pullback is just, this movement down was just a pullback, and it would be great to long more, to put more long positions, okay? Now, someone wants me to have a look on Aussie dollar. Okay, I was completely wrong on Aussie dollar. Right, I did expect that the Aussie dollar was trending higher already on the beginning of the year, but it doesn't seem like it wants to be doing this kind of stuff right now. So what do? We delete this idea, and I will switch to a short idea on here. Why? Well, because let's have a look on the RBA statement today. Okay, so it is a little bit big, but I'm going to read with you guys and interpret as always. Okay. I think it's not a news, but they did hold the target, the target and change it at 4.35%, and the interest rate paid on exchange settlement balances and change it at 4.25%. So the band is between 425 to 435. Right, so let's talk about inflation. Inflation continues to moderate but remains very high. Inflation continued to ease in December quarter. Despite this progress, inflation remains high at 4.1%. Goods price inflation was lower than the RBA's November forecast. It has continued to ease, reflecting the resolution of earlier global supply chain disruption and a moderation in domestic demand for goods. Services price inflation, however, declined at a more gradual pace in line with the RBA early forecast and remains high. This is consistent with continued excess demand in the economy and strong domestic cost pressures, both for labor and non-labor inputs. Okay, so let's just take this last paragraph here. So services price inflation, however, declined at a more gradual pace in line with what the Reserve Bank of Australia earlier forecast and remains high. Okay, this is consistent with continued excess demand in the economy and a strong domestic cost pressure. Okay, so what they want to mean by this is consistent with continuing excess demand in the economy and strong domestic cost pressures. So basically here is that the costs are too high to make the products, but of course, because of the inflation, and this is passed to the final client, to the final buyer, that's going to be me and you, basically, that there is too much supply on the economy right now. So basically, the products that has to be sold, it's not being sold because apparently people are not having money. Okay, so and this is pretty interesting because I want to touch base after on the retail sales that we had from earlier today, that it came negative. It came negative, so it was pretty impressive for me. Okay, because I didn't expect that Australia would have a negative retail sales this year. Sorry, in December, because of the Christmas and and all of those things. So I'm going to touch base on that later, but it feels like the Australians are not saving money. And if they're not saving money, they won't be able to buy things. And if they're not able to buy things, then the inflation can't run smoothly and properly. Okay. So just continuing, higher interest rates are working to establish a more sustainable balance between aggregate demand and supply in the economy. Accordingly, conditions in the labor market continue to ease gradually, although they remain tighter than is consistent with sustained full employment and inflation at target. Wages growth has picked up, but is not expected to increase much further and remains consistent with the inflation target. On the assumption that productivity growth increases to around its long-run average. Inflation is still weighed on people's real income, and household consumption growth is weak and is dwindling investments. So here they do, of course, as always they do, that inflation is still waiting on people's real incomes and household consumption growth is weak as dwindling investment. So this is they always say that, right? Just to calm down the whole population because they need to tell that the inflation is high. Indeed, if we look at beginning of 2023, we had Australia with 7 point something on inflation. So if we look how we finish it, we finish at we just mentioned here 4.1%. It is high. 4.1% is still high. Still above what the central bank wants to keep the inflation. We have a chat here. Let's see. If you benchmark RBA with the Boy released the last Thursday, which one is more dovish? Boy mentioned that inflation will be higher again in the middle of this year, despite trending down for the past few quarters or months. Is Boy going to hold? Yep, cool. If so, is gbpusd going to trend up in the intermediate time frame, or we should look to the overall picture rather than narrowly focusing on inflation alone? That's a very good question. I do have the answer for that. I'm just going to finish RBA first. As I just mentioned, so inflation is on 4.9%. So it's still high, of course. It's still high, but if we look, it dropped 50% already. So higher rates are actually working, despite it's F the whole society. But as they just mentioned, it's not good for the society. But you have to either choose be good to the society in the long run, or just don't get a just don't be good for the society. So I do believe that they took the right steps, and I do believe that the inflation can come down to 2025 again. Okay, so the outlook is still highly uncertain. While there is encouraging signs, the economic outlook is uncertain, and board remains highly attentive to inflation risks. The central forecasts are for inflation to return to the target range to 2 to 3% in 2025, as I just mentioned, and to the midpoint in 2026. Maybe. Services price inflation is expected to decline gradually as demand moderates in growth in labor and non-labor costs ease. Of course, services price inflation is expected to decline. And of course, because the demand moderates and growth in labor and non-labor costs ease, because there are not people getting paid sufficiently to go and spend. When we talk about society, we can't think about the super rich people, because they don't care about inflation. Inflation can be at 100, of course not 100%, but it can be at 10 that you're going to continue to buy. Okay, because not only money, but they have equity as well. Okay, they can go to the bank and they can just ask for more loans because they have assets. So remember, I've explained this last week or 2 weeks ago, can't remember now, that I've talked about assets and liabilities, and that assets, even banks, they hold assets and they hold liabilities as well. Okay, so if you go to the bank, and ask for a loan, they're going to look at your assets and liabilities, and we can give this to you, and then we're going to have inflation premium, we're going to have default risk premium. I've explained these already. So if you haven't been on that webinar, most probably it's going to be on YouTube. Okay, so just have a look on that. On ACY Securities channel. So where were? Oh, okay. So if you go to the bank and ask for loan, they will look at your assets and liabilities, and if we have population not being able to spend the money, of course services will decline, because there's no people to service. If no one is in there on the restaurant, then you don't need a waitress. It's just don't need it. And of course, the demand and growth in labor and non-labor costs is going to ease. Okay, so employment is expected to continue to grow moderately, and the unemployment rate and the broader industrialization rate are expected to increase a bit further. Unemployment rate expected to increase a little bit further. That's something that we need to look when we have something on this economic event happening on the economic calendar. Okay. While there have been favorable signs on goods price inflation abroad, services price inflation has remained persistent at the same could occur in Australia. There are also remain a high level of uncertainty around the outlook for the Chinese economy and the implications of the conflicts in Ukraine and the Middle East. Domestically, there are uncertainties regarding the lags in the effect of the monetary policy and how firms' pricing decision wages will respond to the lower growth in the economy at a time excess demand. The outlook household consumption remains uncertain. Okay, someone have a question again? Yeah, exactly. That also the employment will be down in this case. That's correct, understood. And that's exactly what they say after that. The outlook for where is it? Unemployment rate and the broader industrialization rates are expected to increase a bit further. Okay, so that's exactly the good thinking. Good, you guys paying attention. So returning inflation to targets is the priority. So returning inflation to target within a reasonable time frame remains the broader highest priority, of course. This is consistent with the RBA's mandate for price stability in full employment. The board needs to be confident that inflation is moving sustainably towards the target range. Yes, but it is moving. Okay, but it is moving. Right now, we dropped 50% since beginning of January last year. To date, medium-term inflation expectations have been consistent with the inflation target, and it's important that it remains the case. While recent data indicate that inflation is easing, it remains high. Yes, the board expects that it will be some time yet before inflation is sustainably in the target range. The path of interest rates that will best ensure that inflation returns to target is a reasonable time frame will depend upon the data and involving assessment of risks. And a further increase in interest rates cannot be ruled out. So there we go. Okay, so of course they have to say, they can't come here and say like, oh, we don't need to raise rates anymore. Because it's, in this uncertainty market, we need to have this sort of speech, okay? If everything goes well predicted, okay, that's beautiful. We're just gonna, continue to pause and then we're gonna start to cut. But right now, everything is so unpredictable that they need to come and say, well, it's not ruled out. Okay, otherwise the market will take it as too dovish. So the board will continue to pay close attention to this is important. The board will continue to pay close attention to developments in the global economy, trends in domestic data demand, and the outlook for inflation and the labor market. Okay, so these ones are very important. Outlook for inflation and the labor market. The board remains resolute. Okay, this is necessary. So there we have it. It's more towards a neutral to dovish approach on the statement. Okay. So this had caused your Aussie dollar to drop. This has caused Aussie dollar to drop a bit. So if we look at the 1 hour chart, it's exactly kind of similar, not exactly the same, but very, very similar. What I was looking at the pound dollar again. We had a consolidation here that was just broke down. We came to retest the whole thing and everything. So I do believe a nice short position on Aussie dollar would be in my portfolio would be for my opinion. If you look at Aussie dollar PXM, we have let's have a look on here as well. 70.8%, 77.8% of the market is long. Here, 70%. So yes, short does make sense on Aussie dollar at the moment. Let's have a look at seasonality. Seasonality stays more, continuation of consolidation, and here says up. But fundamental, I do believe on a short of Aussie dollar. Okay. Now let's have a look at gold. And there we have it. Gold is doing what we expected. It is coming down. Okay, so as I've mentioned, we may had a big pullback than expected. We didn't broke the area of 262. So it continues to be, it continues to be trending down. Okay. Again, where to? As I've mentioned already, I have my target on this range here between 199, 198. Okay, between these $100 price. So that was a good opportunity to get short on this retracement, but to hold the gold is very it's very you need to have a very good risk management, but short positions in gold for me would make more sense. Aussie dollar, someone mentioned a number here. 65.35. Yeah, you know, coming back to the area of resistance, it does make sense, this area. Let's have a look. How is my trade on Euro CHF? Okay. Yeah. Yeah, so it is respecting this area here. It has been respecting already for quite a few hours. So I do believe that there is a potential for this trade to get into profits maybe this week. Let's see how we go. After that, once we break down this area, most probably I'm going to I'm not going to close anything, but I'm just going to bring my stop loss to break even. That's my second trade of the year. I only traded once on January. So, okay, that's not bad. All right, guys, any questions? Oh, yes, Patrick, question. If you benchmark RBA with the boy released last Thursday, which one is more dovish? RBA is more dovish. Boy mentioned that inflation will be higher again in the middle of this year, despite trending down for the past few quarters or months. Is Boy going to hold? Yes, that's correct. Okay, so we have a good question here from Patrick. Okay, he's trying to benchmark RBA and Boy. What does that mean? He's trying to take RBA statement and compare to the Boy released statement last Thursday. And see from there which one is more dovish or neutral, or which one is more better or worst from those two. And on this case, I do believe that RBA it is more dovish than the boy. Okay, because the boy, as you say, they know that inflation will come higher again, will trend higher again in the middle of the year. And if they're already predicting these, why would they cut the rates as they know that inflation will come high again? And if inflation come high again, they need to raise rates again, and that's not going to be effective. So for now, yes, the boy, it is a little bit more hawkish. Not that the boy is hawkish, but comparing RBA with boy, RBA is more hawkish. Boy is more hawkish than RBA. Okay. And yes, the pound dollar may trend up in the half of the year, but I won't hold this position for that long because if I'm not wrong, my swaps are negative. Let me have a look. Yeah, my swaps are negative on there. So therefore, I'm just gonna, go until 128 or 127, something like that. Where's my target? I can't remember now. And then after that, if the Fed starts to cut first, and the boy, as they have high inflation, they will have to keep holding. Then yes, I will go long on the pound dollar. But for now, I don't see a reason fundamentally, macroeconomically, reason why would be a good opinion, why would it be good to go long at pound dollar at this moment. Hopefully I've answered your question. We are very close to the finishing line. Do you guys have any more questions? GBP Aussie. Yeah, that's a good trade. You long there? See, again, we put in the 4 hours. We have it here. A consolidation. So a move is to come. Okay, you shorted. Okay. Yeah, so let's have a look on how is the market, what's the market is looking. Seasonality wise, we may have a little drop. DXM, yeah, most of the retail traders are short. So 82% of retail traders are short. So I would prefer going long, especially somewhere around here. So that's actually a good trade. I'm going to be looking at this. Let me have a look on here. Okay, this is a good entry. This trade does make sense. Just let me see how volatile it is right now. So right now is 482. So if we get 482 times 6, it's going to be 2,900. Okay, that's a too big stop loss. Let me put in the 1 hour. So 1 hour, we have 254. 254 times 6 gives me 1,530. Yep, that does make sense. Now we need at least 1.8. That is a good trade if we get in the bottom of the range, because even here we have, yeah, exactly here we have this area of support, sort of resistance that has been broken. So it is a good area. Yeah, I'm gonna be looking at this trade. Gonna be watching this trade. gbpusd. Get long. All right, guys, that's all from today. Hopefully it helped everyone. Does anyone have any questions, last questions? Oh, no worries at all. All right, so I'm going to finish from here and see you all on Thursday. Thanks all for coming, and I see you all on Thursday. See you guys. Have a good week ahead.